Hi, this is Eric Schlein. You're listening to the Intelligent Investing Podcast, and today we have on Trey Henninger. Trey, welcome to the show.
Thank you. Glad to
Yeah,
be
now
here.
Trey, he runs a blog, DIY investing. Is it DIYinvesting.org?
Yes, that's correct.
All right, and then you also have a podcast as well.
Yes, I do. The DIY investing podcast.
All right, cool. And where in Texas are you from?
Um, Originally from Austin, but
Okay,
basically in the Houston area now.
nice, nice. Now, what's better barbecue? Is it Austin or Houston?
Just generally, Texas barbecue is good. We got good barbecue everywhere in Texas.
What's your?
So,
Do you have a favorite spot?
um,
This is like a big deal.
this is a big deal. My favorite is probably Salt Lake and Austin,
I've been
or
there.
I guess it's a little outside Austin, but that's one of my favorites. But there's a lot of good barbecue.
Have
Blacks.
you ever had the bone marrow appetizer at that place?
I have not had the bone marrow
It is
appetizer. I've had a lot
so
of different
good.
stuff though.
They bring out this giant bone split in half where you can just eat out the marrow. And they
Eat
season the
out the
marrow.
marrow.
And
Interesting.
it's like a
No,
season. It's delicious. Yeah.
yeah, I haven't had that, but I've been going there for decades. Basically, my dad used to go there when it was just you drive up. It was an open field, and it was just the dad of the current owner
Hmm.
would sit there, and he has a big old barbecue pit, and would just sell to people that drive up next to it. So.
Cool. Very cool. So tell us. There's a very interesting business that you want to talk about today. So tell us a little bit about this company.
So the company is Northfield Precision Instruments Corporation. They are a dark company, so that means they don't report to their financials to the SEC, but they don't hide their financials. They'll freely give them to you, and they will mail you the financials basically in a little pamphlet. So it's quite short.
So for those
Got a
watching
little,
on YouTube, he's
yeah,
showing a pamphlet. So if you're listening in the car on on the audio podcast, check out this YouTube thing because it's actually kind of cool how they do it.
yeah. So it's
That's
like a little
wild.
fold-up pamphlet,
Never seen anything like that
um,
before.
and it fits. I mean, basically in a normal mailing envelope. And it's actually kind of funny. They change the color year by year based upon which Super Bowl team wins, um,
Okay,
because that's what the prior CEO, he loved football. But
interesting.
they operate in the manufacturing industry, and they manufacture precision air chucks, and they're custom. Basically, they used to be just a generic manufacturer. Um, for those not aware of what this is, it's basically the piece of equipment that holds other tools. So just like when you're working, on something in your house, you might hold, um, like if you're trying to cut wood, you would hold the wood and stabilize it either with your hand or with the tool before you use a bench saw or something, or anything used to stabilize something. Well, in industry, those pieces of equipment are gigantic.
Mm.
Um, and they need to be very precise, and it requires very intense machining. So they buy the commodity, basically steel, and they machine it into very precise equipment that needs to be precise to within tenths of a millimeter or hundredths of a millimeter. Um, but that what that does is it allows them to sell. Um, they basically have pricing power. But as a small company, are about $5 million in market cap. So it's very small, probably well, I know some of your listeners like to buy a lot of small companies, but it's quite a small company. Um, I think it's a
Interesting.
good start until we can go into
Yeah. And
questions or whatever.
how did you find this company?
So I don't remember exactly where I found it originally, but it was one of two places. It was either the Focus Compounding website or the Elementary Value blog.
Okay.
Both are great sources for investment ideas. I tend to source almost all of my ideas from other bloggers or podcasts.
And
I
we've
source,
had David Flood and Jeff Gannon on the show.
yes, yes. So I think I talked to David about this one before I bought it, and he wrote it up and didn't like it, and then because it wasn't cheap enough in his eyes, and then I liked it,
Well,
and so I bought it.
he also looks at like long-term charts and how stocks
Yes.
accumulating. So if the chart isn't there for him, he's not gonna buy it.
Yeah. So for him, the chart wasn't there. He basically said, I'll buy it at a much cheaper price, and I'll be happy to own it then, but I'm not ready to buy it now. Um, it's run away from that price, but he might end up being the one that's right, and you might be able to get it back at that someday. But
Yeah.
I don't think so. But that's why I bought it.
No, there's almost no liquidity in this thing, right? I mean, can you even buy
Yeah,
shares?
it's very, very hard. Um,
How long did it
I
take for you to accumulate a position?
I spent probably 6 months trying to buy my position. Now, I run a portfolio I target 5 stocks, so I try to put 20% of my portfolio into position. This stock I ended up stopping at 5% because it was just hard to get the shares. And at the time I was pretty heavily invested, so the 5% was a good amount. Because in large part you have to put out buy orders and leave them there. And so in order for me to move up more, I would have to sell stocks. It wasn't like I had cash sitting around. If I had
Right.
cash sitting around, I'd just leave it in an open buy order. But it took me about 6 months, but then I got all of my shares on 2 days.
Oh wow.
Um, so on a normal day, zero shares trade in this stock. And but on some days you'll have 100 shares, 500 shares, 1,000 shares, 3,000 shares. Um, for reference, that's the share price is in the $20 range. So I mean, if you only have 100 shares trade and then no shares trade for 3 weeks, then you're only trading $2,000 worth. So it takes a long time to acquire a position, but every once in a while, you can acquire thousands of shares on a single day.
Now, did you have to
Um,
put limit orders at the price, or did you have to raise the price from the last bid?
so for this one, I ended up raising the price one time. So I filled it in two orders. The first order, they hit my price. And then the second order, I hit the ask.
Okay.
Basically, someone was trying to sell in volume. So I actually had my bid higher than the previous offer
Okay.
um, after the first transaction because I was trying to entice someone to come down um, and was able to do that. In general, the stock hasn't had a huge bid-ask spread. It's just had very low volume. Now, right now, it has a very big bid-ask spread. But when I was buying, I bought in 2019.
Okay.
I was able to acquire my position in, like I said, in 2 days. But it took 6 months of bidding and watching the price go up and down. But
Got it.
so you can get into the position quite heavily as an individual investor, but professional investors are going to really struggle to have it to be able to get into this stock.
Yeah. Now, tell us about why you like the stock as an investment.
So I like the stock as an investment for a few key reasons. The first one, so I'm a value investor, and the stock is quite cheap. Um, when I was buying the stock, my average cost is in the $17 range. And at the time that I was buying, the earnings per share was about $4.20.
That's crazy.
So you were buying, I mean, I was buying it basically a 4 times PE.
And are these
Uh,
earnings growing over time too?
yeah. So in 2015, yeah, let me look at my reference here. So in 2015, they had like 50 cents per share earnings, 2016, $1 per share, 2017, $2.46 per share, and 2018, $4.27 per share. So for 3 years in a row, they were doubling their earnings every year. Basically, there was a 3-year CAGR of 100% growth, which I found quite attractive to also buy that at a PE of 4.
Was
Um,
there a reason for that insane amount of? I mean, that's not normal for the company. I would imagine if it's a $5 million
it's
market cap.
no, actually, for many years. So in 2012, they were hit. I think it was 2012. Someone's going to catch me this being blatantly wrong, but it was either in 2012 plus or minus like 6 months.
By the way, knowing my audience, if there is something wrong, someone will catch it.
Someone will catch it. So,
We have a very
um,
smart listener base.
yeah, with a live audience, it's always bad to take historic data and can get caught in it. But basically, Hurricane Sandy hit New York. It's based in New York City, or not New York City, but in New York, near New York City. And Hurricane Sandy hit and destroyed the facility. So they rebuilt the facility because they had insurance proceeds to do so. but it slowed getting the business going again.
Okay.
And then so for 3 years, they basically earned 40 to 50 cents per share. And once they had all their equipment up and running, they were able to purchase it. They were able to start growing revenue. And the company has pricing power. So what they're able to do is they can have a set gross profit percentage. It doesn't fluctuate really year from year. They can charge whatever they want, because what happens is this is a key part of manufacturing facilities. So they provide supplies to other manufacturers. Well, their equipment might cost the company, let's say, $5,000 of raw materials to build. But what happens is when the equipment goes down, the company that they're selling this to might lose millions of dollars a day. So what they can say is like, well, we'll charge you 50 grand or 100 grand, or we can sell you basically whatever we want to charge, because it's a custom job. They are one of the best in the world at that. I listened to their annual meeting a few weeks ago, and they basically said, we have no competitors. There's people that make this equipment, but there's very few, if any, custom competitors.
Why are they still so small then?
It's a very small industry.
Okay.
So it's a niche industry. Now, part of it is, and this is part of what I liked about it. So they were basically able to grow their earnings, or they were growing revenue by, let's say, $1 million a year for those 3 years. And then like half of that was dropping to the bottom line.
Okay.
So they were just having very high operating leverage, which is what drew me to it, because you'd see they'd buy more equipment and then they can sell more product. Buy more equipment, sell more product.
How long have they actually been publicly traded for?
They've been publicly traded for decades. So they were founded in the 50s, I think. This is where I'm going to get caught in something. But
Okay. Well, you're fine.
But yeah, so they've been publicly traded for decades. At least into the 90s is what I'm aware of.
So so out of all this money they've made for 50, over 50 years, where has it gone? Has it been back to shareholders as dividends, or what's?
They pay out dividends. So if you look at the history, which is usually rare for a $5 million company, but
Yeah.
if we take like 2014's earnings, they earned 52 cents a share and paid a 55-cent dividend.
Got it.
And so in 2015, they paid 50-cent dividend on 53 cents of earnings. Well, what they changed in 2016 was they started seeing revenue growth opportunities, and so they started retaining earnings.
Mm-hmm.
So when they earned $1, they only paid a 60 cents dividend, and they were able to retain that earnings and then grow earnings from $1 to $2.40. And so then in 2017, they paid $1 in dividends. So they had a history of basically paying 100% of their earnings as dividends.
Got it.
Now, basically, they're sold out. So the interesting thing that they said in the annual shareholders meeting was that the company has growth opportunity, but they need to build a new building to expand. So basically, they operate in a 15,000 square foot facility, which is pretty small when you think about manufacturers in general.
Yeah.
But they already own the land to add an additional 10,000 square feet, and they need to build a new building in order to fill it with equipment and produce more. And so at their 2018 earnings rate, they're sold out. They can't sell much more, but they have the ability to expand into this building, and there's plans to do so within the next couple of years, basically.
What does the management? What does the management pay themselves?
The management pays. It's hard to see. They don't report that. And again, this is one of the differences that they have total. You obviously know the amount that they pay for SG&A and stuff, but they don't break down management expenses because they're not SEC reporting. They don't have to report that. But it's very heavily owned by management. I don't know the true insider ownership, but I believe it's over 50%.
Gotcha.
So I think this is a controlled. Well, it's at least controlled by like a family.
Would they ever just take it? Would they ever just take it private? What's the point of the shares even trading?
Yeah, it's interesting. It was very odd being in the annual shareholders meeting because it's the first time that I've been able to attend it, because generally only hold it in person. Well, with COVID, they put it on Zoom,
Yeah.
and there was basically myself and two other investors, and then you had the whole management team and then the family that owned it, or like the controlling family. I guess it's two families. Like, I think it's
Okay.
like maybe the grandkids or something of the founder, and their spouses. But there are only two other people. So it was really interesting because they're like, oh, we didn't know anyone would want to call in. They basically, I think, not had to interact with shareholders, and they didn't really understand even why, that I owned shares. They're like, because like, well, we don't see you on our register of people, or, they didn't really fully understand the idea of the shares being at a brokerage account or something along those lines. So they're very small, and I don't think they've thought about it in that way.
Interesting.
Basically, I mean, they take out the earnings and they pay them as dividends, which is great for shareholders.
Yeah.
As long as you're a minority shareholder, you're going to get the earnings.
Have the returns been? I mean, if you were a shareholder for 20 years, have you had a good rate of return? Have you looked? Have you actually calculated that?
I have not calculated that. No.
Okay.
I wouldn't say it's been terrible, but I think you were probably set back significantly with the 2012 hurricane.
Okay.
And it destroyed. The problem is that I've tried to get older reports, and they just because they're these paper documents, they were all destroyed by the hurricane. So I only have reports going back to 2013, I think, or 2014, whatever, right after the hurricane.
Have you taught?
But I know David Flood has some of that information on his website of the 2000s of information.
Interesting. And what do you think the company is actually worth?
So since I sent my information to you and we set this up, their 2019 earnings actually came out, and their earnings dropped for this year.
Okay.
They talked about that in their 2018 report, kind of predicting, it's going to be a tough year, and because of the tariffs, and they were projecting an industrial recession. And for many people that aren't aware, an industrial manufacturing recession basically began at the end of last year. Even though the overall economy stayed out of a recession in 2019. Mm-hmm. And so you see that in their earnings. So they dropped from their $4 range to the mid $2 range.
Okay.
In earnings. They predicted that, but at the time I didn't think so, because if you read their letters, which are quite short, but if you read every letter, they're always like, oh, this year was so great. We don't know if we're going to do as well next year. And then each year they kept outperforming their expectations. So I was a little hesitant on that. But if you normalize their earnings over the last 3 years, you get about $3 per share. They also have growth opportunity. And they expect their sales to exceed their 2018 peak in the next 3 to 5 years. And that it's really basically just this short-term recession that's causing them an issue. Now, it's still quite good because you're still buying at a great price. If you were to buy at $23, I think is the current price.
Okay.
You'd be at 7 times earnings, 8 times earnings.
Okay.
I don't think the company should sell for anything less than 15, because they've demonstrated they have pricing power. It's a very high quality company. They're recognized.
So you would pay 30. Would you pay 30 a share if you were able to get shares today at 30? Would you pay that?
If I could buy a lot of shares at 30, I'd buy it. Yeah. If I could buy, so it's I have a 5% position. If I could double my position, I'd buy shares at 30. If I could quadruple my position to make it a full 20%, I'd buy them. What I wouldn't do is I wouldn't buy it at 30 if I could only get an extra percent.
Yeah. Would you just put it at the market price? Is that how you would recommend for people to do it?
Yeah. So if you want to buy shares, what I would do is I would put, the way I bought shares is I would put my full asking amount. So I put a full request for basically my full 5% that I ended up getting on the market, on the bid. And I just made sure I had the highest bid. One of the things I think that people have a problem with when they buy illiquid companies is they only bid a smaller amount of shares. Let's say, 100 shares or something. If you want 1,000 shares and you only put a bid out for 100, then no one knows that you want 1,000 shares.
Right.
And you don't think about this in a liquid company, but an illiquid company, for instance, I said I'd buy a bunch of shares at 30, but no one knows I would do that until I put that bid out there. The same thing is true that no one knows that there's someone that wants to shares. Like if you want 10,000 shares, should put that out there and just make sure you're the highest bid. You don't necessarily have to put it above the market price for the last trade. You can, but what it will tend to do is that I've seen at this company and other companies is if I put out a bid for 10,000 shares on NFPC, it will signal to the sellers that, hey, someone could buy 10,000 shares. And they might, if they have that volume, or if they have 3,000 shares or 5,000 shares, they'll put that on the ask at whatever they're willing to sell at.
Yeah.
And if it's low enough, then you can take them out. So like, I don't mind raising the price of the stock if I think it's severely undervalued.
Right.
I mean, I think this company, when I was considering where would I sell it, and I was considering, okay, I might sell it at $100. And it's currently at 23. My cost basis is 17. Because I think when you're growing as rapidly as they are, and if they expand as they think, you could see earnings triple from here.
Yeah.
They have the demand, they just don't have the capacity. And they have a lot of new customers now from the COVID-19. Basically, the healthcare market, they've broken in pretty heavily. Because there was huge demand for retooling equipment to make masks, to make, face shields, everything that people use in the healthcare sector. Well, people manufacture that and they make the equipment for that. So they broke into a lot of new customers. They just don't have, so they had to cut down on some of the non-healthcare customers. So, I mean, I value the company. I never try and actually, for companies like this, estimate a true number.
Yeah.
For what I think it's worth, because it's just so difficult.
Sure.
What I do is say is I can't see it being worth less than 10 times earnings when they've demonstrated clear pricing power and very strong ability to grow.
I mean, that makes sense. That completely makes sense. It's a pretty simple idea.
And I don't want to sell it for less than 20 times earnings.
Yeah.
So, I mean, if that means I don't want to sell it for less than $60 a share, basically.
Okay. Interesting.
I mean, now if someone was offering to buy them today for like 55, well,
you'd probably take it. Yeah.
There's a lot of good deals in the market today. So it's like I can reinvest that really quickly because I'm selling it at 18 times earnings or something,
sure.
Right? But you're not going to get my shares for less than 10 times earnings, or less than 15 times earnings. So that's how I think about it. It's more just a range of value.
Yeah, no, I think that's smart doing it that way for sure. Now, for is there any? I mean, I think we covered a lot. It's a pretty simple idea. Was there anything else particularly that you thought was worth mentioning?
Well, one, I think the thing that I've missed doing is I haven't been able to visit it myself, and especially COVID's kind of slowed that. And I think visiting the site would be very helpful. So if someone's in the New York area,
where in New York is it?
I'm really bad with it's basically right next to New York City. Is it Staten Island? Is that other island on? I don't know the names.
I mean,
I'm really bad at
there's Staten Island's part of New York City. It's one of the boroughs. There's Long Island, which is
it's on Long Island.
Okay.
Yeah, so it's on Long Island, and so if you're anywhere near New York City, it's be pretty easy to visit. They might want you to be a shareholder if you visit. Yeah. I'm unsure. But maybe not. I mean, they seem very personal. Basically, if you just email them and ask them for an annual report, they'll send it to you.
Okay.
But I think the main thing is understanding the growth story is the big question that an investor might have. I mean, because now I don't think you need growth if you buy for less than 10 times earnings, especially when they distribute all of their non-growth as dividends.
Yeah.
So at current prices, that's not a big deal. The hardest part with the company is just getting your shares. But if they are growing, and if the company starts, let's say doubles in price and is at $45 a share, well, now you're starting to price in some growth to justify your investment. I like to get a 10% return on my stocks, so I use a 10% discount rate. That's why I was using that 10 times P as a cutoff. But I think if you're interested in that, then it's just kind of I'd visit the property and really understand this building expansion that they're going to do, and see if someone at the company would walk it out with you, or have an idea of when they'd install it. I wouldn't have been surprised if we didn't have COVID that they would have installed it or started construction this year. But I think that's going to be pushed at least a year, maybe a year and a half.
Interesting.
So, but I'm happy to cash my dividend checks, and it's rare to get a dividend. I mean, that's what I think the main takeaway is. This company is high quality. They're paying a dividend, and they've demonstrated the ability to reinvest capital. And when they can't, they pay it to you.
Yeah.
And finding all of that in today's market for less than 10 times earnings is very attractive.
Yeah.
Or at least I don't have 10 other ideas like this, is what I would say.
All right. Interesting. Well, hey, it was a pleasure to have you on the show. And just once again, for listeners who want to listen to your podcast or go to your blog, give them what's all the info if they want to check you out.
Yeah, so I have a blog and podcast. My blog's at DIYinvesting.org, and the podcast is the DIY Investing Podcast. There's a space between DIY and investing. And you can follow me on Twitter at Trey Henninger.
Okay.
And you can find me looking it up that way. That's the best way to get in touch with me, ask me questions. If you want to ask about this company, happy to chat, that sort of thing.
All right, cool. And on ericschlein.com/podcast, we will put up all the show notes with all that information for you guys. All right, cool. Well, Trey, it was a pleasure to have you on, and I hope you have a good rest of your day.
Thank you. You too.
Yeah, take care.